they obviously were both overbought. They were due a correction. I think the correction was far more severe than it would have been left to its own, so to speak.
Bill, if I may interrupt for a second, what was it like inside the Holter house on the day silver was down 35%?
Surprisingly calm. I mean, I knew there was going to be a pullback. I did not believe we'd see, $35 in a day. That's absurd. And the fact that the Chinese have closed their paper markets, I mean, they shut some traders down for exceeding position limits.
Yeah.
Which is something that the COMEX, CFTC, that never happens. They're routinely trade above and beyond position limits.
Why let the rules get in the way now, right?
Right.
I mean, you have to factor in. You have to also let your governments front run things, as I understand is the policy these days. And quite excited to get your take. We talked a little before we hit record over some of the geopolitics, which I am stunned by. But before we do that, since you're mentioning China, I am going to pull up our silver price again here, where we see just under $60 in the US. And then if we look at our Shanghai spread, still at $7.25 today, 12% premium. And I will find our chart back here where, I mean, this spread kicked up. I mean, this is not normal. I think that's been lost in the last couple of months. I understand people are focused on the fact the price is lower, yet that spread, here we see the silver premiums, and if we take a look at the 3-year, I mean, you see it was much lower. This is in yuan, but basically went from, it was around like $1, so went as high as 18. You can see here, right after Christmas, the spread in Shanghai jumps, which made sense because London had a shortage to address their shortage. Metal comes back from the COMEX and from China. And we had heard China was tight. Obviously, it's the industrial center, yet Bill, was a couple of years ago, we were talking about how there was a $3 premium. Now we have this has been going on. We're in freaking August. This is month 8. So what would you make out of this, which is really, we're in historic territory. I think it's safe to say with that, yeah?
Well, it's been a head scratcher. And I'm not sure whether that 12% is VAT or not VAT.
That is not VAT. I know a lot of people, and I apologize for interrupting again there, but the clearest evidence, and I have seen people review it, but it wasn't, where was the VAT there? That didn't change on Christmas. So anyway, continue, please.
Yeah, I mean, silver is tight. And the fact that there is, I mean, if that is not VAT, then why does that arbitrage still exist? And the only thing I can come up with is you've got arbitrageurs that are not willing to take the risk of buying on COMEX and delivering in China, or being contracted to deliver in China, because what if they don't get filled off the COMEX? Then they've got to make it short in China.
While most investors kept their eyes on falling prices, something else was quietly drawing attention: a persistent premium on silver in Shanghai compared to Western markets. A spread of more than 12% held for months is unusual by historical standards. Normally, arbitrage traders would step in and close a gap that size almost immediately, but that hasn't happened here. One explanation floating around is that physical silver remains genuinely tight, especially within industrial supply chains. Reports of Chinese and Indian buyers going directly to mining companies to lock in future production suggest real demand for physical metal may be running ahead of what futures prices are showing. The premium itself has become a kind of window into stress that isn't showing up on the surface.
Yeah, it's stunning how the spread sits there. There's an ARB on the board. I would say my leading candidate, if I had to put my ounce on one, is that there's some degree of tightness still in the market. I think you may have seen, we have a David Stein of Kuya Silver. He was a smaller producing silver company. He got calls from parties in China and India trying to buy his production at a $10 premium. Right. So anyway, Bill, I know
that's common. That's common, as I understand it. Miners are being contacted on a daily basis to try to tie up some of their production.
Well, it would make sense. Again, I know there's been a lot of thrifting going on with the solar panels, and Silver Institute, they had a much lower deficit, still a deficit, yet also when I think about the AI world, it seems we're heading into, I think there will be new sources of demand. But Bill, something right. I know you've had your eye on and wanted to bring up. It's interesting how this 10-year yield, not just in the U.S., but a whole host of other places, but certainly in the U.S., ticked up. It's like we got up to 475 earlier in the past week. What would you say about the rising yields here and how concerning that should be to people?
Well, finally, the talk is about the Fed raising rates, but their last two operations was a cut. 2.5, 3 years ago, they went in a cutting cycle, and then they did again a year and a half ago. And each time they cut rates, bond rates went higher. And it's my belief that the next time they cut, and if rates go higher, that's going to be it'll be huge news, because it will show that the Federal Reserve is losing control of the yield curve. And what's really interesting, so the yen, there was intervention by Japan in the yen, along with supposedly 5 or 10 billion of intervention from the Treasury, where they sold euros and bought yen. Well, that's not what prices say, because the dollar dropped precipitously on Friday, and the euro is 50% or thereabouts, maybe a little over 50% of the USDX average. So if you're selling euros and you're buying yen, then the dollar should strengthen on the USDX. The dollar should have been stronger that day. And it's my belief is that what they did was they bought yen with newly created dollars. And I mean, there's no way for us to know the truth as to, what was actually sold to fund the purchasing of yen. But there's no question yen were purchased, but where did that funding come from? And I think we're being lied to.
No, Bill, come on. The Trump administration, and sometimes I apologize for Trump bashing, although it's like the guy is just, at this point, I'm not going to put Mickey Mouse ears on. He's either asking for it. I have wondered, is someone putting a metaphorical gun to his head and saying, look, you're going to go out, you're going to say this insanely stupid shit. They're going to giggle at you, but you're going to go out and say it. Bill, you and I talked about, I continue to see a lot of stuff that would suggest there's disturbingly disgusting levels of front running going through these announcements. It's reportedly coming from the White House. Am I wrong about anything? Is there anything you would care to add to a situation where we've won this war? I mean, it's amazing how many times you could win one war as well.
Well, you go back to what was it, 2003 with George Bush on the destroyer. They won the Gulf War, but we were there for another 20 years. There's not proof of front running. I mean, you can look at charts and you can see, yes, somebody's front running. We don't know for sure who, but I would just say that some of the things that have been done since 2 days before the inauguration day. I say 2 days before because they came out with the Trump coin and the Melania coin, and Trump's made money and everybody else got hammered. It's just there's too much self-serving. And I
Bill,
think
do you have a
so-
case of TDS? Is that what I'm hearing? That's what the kids tell me sometimes. I don't know.
No, I just call it the way I see it. I mean, I voted for Trump. I wanted to believe all the things that he was promising. But the amount of, self-dealing, it just, I mean, think about this. So they go in, Gaza's wiped out, and they talk about turning that into a resort. That's beyond absurd.
Silver isn't just a precious metal anymore. It's increasingly treated as a strategic industrial input. Solar manufacturing keeps consuming large volumes, even as producers work to trim silver use per panel. At the same time, the fast build-out of AI infrastructure is creating fresh demand, since data centers and power systems rely on high-performance electronics that need silver-containing components. That combination of investment demand and tech-driven demand is reshaping the long-term story, even as official deficit estimates bounce around year to year. Many analysts now think future consumption could stay structurally elevated, which makes physical availability matter more than short-term price swings.
So Marco Rubio was out saying that if you've ever been critical of Israel, they could revoke your visa. So does that now? I wonder where the line is between when domestic citizens could be facing penalty, but am I at risk of being penalized if I'm not on board with Netanyahu saying, I know what America is. It's something that can be easily moved in the right direction. Or, Bill, I won't pull up Ben Gvir or Bezalel Smotrich comments today talking about how worthless Palestinian lives are and why it's okay to rape and torture them because they're not real people. But is it like, are we at, it seems like Rubio is saying we're at risk if we don't praise and worship that. I'm curious your thoughts on that.
Yeah, I'm not on board with that at all. It's just another illustration of how badly we've been lied to. After the first week or 2 weeks, Iran was supposedly crushed. And if they were crushed, how is it that they're still launching stuff every day?
Bill,
Chris, it's a bad look for the U.S., no question about it. Financially, it's a horror show. I mean, we've already spent way over $100 billion on this. And the worst thing is the optics. The big bully on the block can't handle a small foe. I mean, what if this was Russia? What if this was China? What if it was China invading Taiwan? And we spent a goodly portion of our ammunition at this point. And why the administration would allow publicly the knowledge that the ammunition supplies are dwindling. I mean, that's totally bad. I mean, you're telling your foes, we're running low on ordnance. Well, I think something beneath the surface is already exploding. If you look at credit markets, as I mentioned, rates all over the world are going higher. And what that means is bond prices are dropping in actual price, in actual value, if they needed to turn around and sell today. What that says, because the dollar is the foundation to the world's financial system, it means that foundation is getting hollowed out. Going one step further, we know that the yen, they had to step in and try to support the yen because it's been collapsing. At the same time, interest rates in Japan are going higher. That's blowing up both sides of the carry trade. And the carry trade was not insignificant. It was literally several $1 trillion pumped in the system, which went into stocks, went into bonds, went into financial assets. But that is being reversed. And you've got situations now where you're going to get margin calls out of that. So the unwinding of the carry trade basically is like Warren Buffett talking about the tide going out, and you only get to see who's swimming naked once the tide goes out. Interest rates going up that's going to set off what he calls weapons of mass financial destruction. I mean, this is going to be a credit event, and it's going to bleed over to derivatives, and derivatives are what? 4 or 5 times the size of the assets on the planet Earth. You know, it's bets on top of bets on top of bets. I would have no idea.
Okay, well, if you ever want to make side bets on that one, you can call me. But, is that what it's going to take, though? A rate cut, or what is...
The conversation then shifts to bonds, where rising yields are being read as a warning sign for the broader financial system. The concern isn't just higher interest rates themselves, it's the possibility that central banks are losing their grip on long-term borrowing costs. Historically, rate cuts haven't always translated into lower bond yields. In some past periods, yields actually rose afterward as investors demanded more compensation for inflation and debt risk. With government debt levels now far exceeding where they stood during the 2008 crisis, the system has become more sensitive to rising interest expenses. The underlying worry is that a future credit event could spread quickly through bonds, derivatives, and global liquidity markets.
It doesn't matter. It doesn't matter. I mean, I think, in my opinion, gold and silver have bottomed. They're going to work their way out of this, and we are going to have, in our future, there will be huge spikes in the dollar price of gold and silver. But what I'm saying is, it doesn't matter. It doesn't matter when, and it doesn't matter what the reason is. If you know what the ending of this is, and the ending is that the debt that's outstanding globally cannot be repaid in current currency purchasing power terms. The currencies are going to have to lose. They're going to have to be diluted in order to pay the debt, the current debt that's outstanding, off, or even to just service it. I mean, look at the amount of debt service in the U.S. We're up to $1.5 trillion a year.
Yeah,
That's
but Bill, you forgot. Scott Bessent, Treasury Secretary, he said we're going to grow our way out of it.
Great. He can say whatever he wants, but that's not possible. Mathematically, that's not possible. And mathematically, the debt cannot be paid back in current purchasing power terms of currency. And that's the problem, is the interest rates are rising all over the world onto a system that's more indebted than it's ever been on any metric, however you want to measure it. This is going to be a credit event. I'm convinced of that. Well, and it goes back to Stevie Mnuchin. Gold is good.
You said gold is safe.
Yeah. What's that?
He said gold is safe. He didn't say the Fort Knox gold is safe.
No, he didn't say safe. He said gold is good. That's what he said. And he's right. Gold is good. It's real money. But there's not been an audit since 1956. And we're supposed to believe that he went in and audited / assayed a bunch of bars. No, nothing of the sort. And the same thing with Bessent, saying that the gold's all there. Well, that may be the case, but who owns it? Is title still in the Treasury / Fed, or has it been leased out? I mean, we don't know any of this. But we do know, going back 20 years ago, that you had massive central bank leasing. And when the price of gold started going higher, you had, a lot of companies that were hedging. Barrick, a perfect example. What'd they lose? Something like $6 billion on their hedge book. It's been a financial cartoon as far as the gold market is concerned, because you can't see behind the curtain.